Thank you, Raymond. First of all, I would like to apologize for a couple of delays in starting the call. Sincere apologies from Zee management for the same. Good evening, everyone, and welcome to Zee Entertainment earnings call to discuss company's performance in Q2 FY20. Joining us today is Mr. Goenka, Managing Director and CEO of Zee Entertainment, along with Mr. Rohit Gupta, Chief Finance Officer, and other senior members of the company. We will start with a brief statement from Mr. Goenka on the first quarter performance. Subsequently, we will open for the call for questions. Before I pass it on to Mr. Goenka, I would like to remind everyone that anything we say during this call that refers to our outlook for the future is a forward-looking statement and must be taken in context of the risks that we face. Thank you, and over to you, Mr. Goenka.
Thank you, Vijay, and thank you for apologizing on our behalf. I would like to welcome everybody to this call and appreciate your joining us for the discussions on the results of the second quarter of fiscal 2020. I am pleased with the performance we have exhibited during the quarter. Our entertainment portfolio continues to grow from strength to strength across all formats and maintain its leading position. Our television network has emerged stronger post the implementation of tariff order on the back of a strong customer connect and brand pull of our channels. ZEE5 continued to gain traction across audience segments in the market, driven by its compelling content library and expanding list of partnerships across the digital ecosystem. This strong operating performance allows us to deliver industry-leading growth in both advertising and subscription despite the tough macroeconomic environment. Domestic subscription growth of 27% has reaffirmed the value proposition of our television network that has been built over the years. The impact of tariff order is now largely settled down, and we have brought increased transparency along with improved monetization. Our domestic advertising revenue growth, though significantly lower than the historical trend, is higher than the industry growth. We have witnessed an improvement in ad spend through the quarter, and we believe that the onset of festive season, along with measures taken by the government, will help revive the consumption growth. The domestic broadcast business continues to maintain its position as India's leading entertainment network. During quarter 2 of FY20, our television network had an all-India viewership share of 18.4%. While we have maintained our viewership share in Hindi GEC segment, the network continues to strengthen its position in Hindi movies cluster and the regional portfolio. Our channels have seen strong acceptance across markets under the new tariff regime, especially in the regional markets. Reach of all the pay channels has been impacted during the implementation of the tariff order. In the regional markets, there has been a strong revival of reach post the disruption in the early days of the NTO, and in almost all these markets, recovery in reach has been better than competition. Zee TV was the number 2 channel in the pay Hindi GEC segment, and our strong movie library helped further consolidate our number 1 position in the pay Hindi movie genre. We maintain leadership position in Marathi, Bangla, and Kannada markets. Zee Keralam continues its impressive start, reaching 8% viewership share in less than a year of launch. We are on track for launch of new regional channels in line with our annual plans. Now coming to ZEE5, in the month of September, it recorded a peak daily active user of 8.9 million. ZEE5 released 23 original shows and movies during the quarter and is well on track to achieve its commitment of producing over 70 original content pieces this fiscal. Our content co-production deal with one of India's leading production houses further consolidates our position as India's biggest producer of original content. Along with content, ZEE5's partnerships with players in the digital ecosystem are helping build traction on the platform. Tapping one of the fastest growing smart TV ecosystem across 45 brands and comprehensive delivery across all operating systems gives ZEE5 an added advantage in distribution. ZEE5 also launched ad suite products and will allow it to offer wide-ranging and customized advertising solutions to brands. Coming to the financial performance, our overall revenue grew by 7.4% year-on-year to rupees 21 billion. EBITDA for the quarter stood at rupees 6.9 billion, and the EBITDA margins were at 32.7%. Our cash and treasury investments at the end of September quarter stood at rupees 14.8 billion. Finally, I'd like to address the question you might have regarding note number 5 to the financial statement. Our fixed deposit worth rupees 2 billion was wrongfully and unilaterally adjusted by a bank against the dues of certain related parties. The said related parties have already reimbursed the same amount to the company. Accordingly, there is no financial loss to the company. We are seeking legal advice on the matter to take appropriate action or resolve the matter amicably with the institution. With this opening comment, I would like to address any questions you may have.
Sure, thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. We have the first question from the line of Abneesh Roy from Edelweiss. Please go ahead.
Thanks, sir. My first question is on advertising. 2% growth, how does it compare with the industry, TV industry ad growth? And second, digital ads have been taking share from rest of the segments over many years. New development is multiplexes are seeing very good growth. We saw the number one multiplex see 60% ad growth this quarter. So whenever slowdown happens, we always see that escapism due to which footfalls increase. So is this an additional worry, multiplexes, is this an additional worry for broadcasters apart from the digital in the current context?
Thank you, Abneesh. For the first question, the overall industry, in our estimate, for television saw a low single-digit degrowth. I think the number is around 4%, and we have still delivered a 2% growth irrespective of that. Also keep in mind that this also has the impact of the FTA channels that were switched off on 1st of March of this year. Despite all that, we have still managed to grow by 2%. On the second question on multiplexes having an impact on the broadcasting business, I think it's too early to tell. If you look at the total number of cinema goers, I don't have the total numbers, but if I take the biggest blockbuster movie, it has been seen by 30 million people maximum. So from that perspective, our medium is far more mass than multiplexes. And at the price points at what television is available in the country, I don't think multiplexes will be able to match that kind of a mass impetus.
That's useful. My second question is on the fixed deposit, which you proactively mentioned. Any more such issue can happen? So are you doing anything proactively in terms of ring fencing any of the other FD, because there's a lot of cash of the company? So if you could clarify on that.
Yes, we have taken all necessary measures to ring fence all our other deposits, and nothing of that sort is likely to happen.
And one follow-up on the ICDs part, if you could clarify which entity, when was this money given, and any more such issues can happen on the related party ICDs?
So this issue happened 3 years ago. This was an ICD that we had issued to a company named Oscar. We have been trying to recover our money for quite some time from them. The promoter group or SL group had stepped in last year to help us recover these monies through their good offices. But as a prudent governance measure, we have taken a choice to provide for it. We still expect the recovery to happen of this money, but we still wanted to go ahead and provide for it in our books. And
last question.
There are no other such treasury operations that are.
Sure. And last question again on the business. So recently, a la carte pricing has been cut by most of the players. So one is why it's happening now. Could the bouquet prices also come down? And what percentage of the revenue is currently a la carte? So do you see a la carte mix increasing because of this?
So firstly, the bouquet pricing has not been changed. It is only the a la carte pricing that we have done as a festive offer. It is not a change in perpetuity. We have the option of, and if you read the tariff order, any promotional activity cannot be valid for more than 3 months, as per the tariff order itself. So I expect this to be a short-term matter. The total number of a la carte channel penetration in our country for us is less than 10%. So I don't see a major impact on our revenues. Only it should help us increase reach, if at all, and therefore higher advertising revenue.
Okay, Puneet, that's all from my side, and all the best. Thank you.
Thank you, Anish.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions on the balance sheet. So, trade receivables are up from 18 billion to 24 billion. So what's the status of the related party receivables and what's driving the significant increase? I think you had 5 billion receivables from Dish TV and City Cable at the end of fiscal 19. Any movement in that number? That's first. And second, other financial assets are up from 1,000 crore to 1,400 crore. You had given some advances. What's the status of that now? And yeah, that's it from my side.
I just request Rohit to answer that.
Yeah, hi. So yes, the debtors have gone up in this quarter, and it is on account of certain delayed payments from our MSOs and including Dish and City. We have now received a binding and definitive payment plan from both, and we expect to bring down this to the normal levels by Q4.
Sure. Have they increased compared to end of fiscal 19 or they are stable? What's the status?
Sorry, can you repeat?
The receivables from Dish TV and City Cable, are they still increasing or they are stable?
No, we expect the receivables from Dish and City to start coming down. As I said, we have received a definitive and binding payment plan from both. And, as per the payment plan, both the receivables from both the parties should come down in this quarter itself and definitely in Q4.
Okay.
So regarding your second question on other financial assets, so this primarily the FD which Puneet talked about, we have reclassified that fixed deposit here. So that is one increase, and second is the normal increase of the unbilled revenue on subscription.
Sure. On the FD, how could the banks attach that? I mean, was there some bank guarantee which Zee had given, or how did this happen that the banks attach FD of Zee when for related party dues?
Kunal, as I said in my opening statement itself, it is a wrongful and a unilateral decision they have taken. There is no guarantee given by Zee to any of the group companies. So we are taking appropriate legal advice, etc., to take action.
Thanks. Lastly, on inventory, again, there's an increase from 38 billion to 43 billion. Where do we see it stabilize, and when does it start coming down?
So, Kunal, if you recall in the last meeting, we had talked about the advances that were given out towards film acquisition, etc. That's what is now getting accrued into inventory, partly, and partly also it's all content that we are securing for ZEE5. I don't think this will go up significantly higher, but once the new channels that I talked about, the regional channels also start launching, we will start passing to the P&L, and they will come down significantly starting next fiscal itself.
So do you see it as maxed out, or it will go up further before it starts coming down?
So it's a matter of time before those advances get converted into inventory. Beyond that, it's not going to increase, and hopefully my channel launches will happen in parallel, and therefore you'll see part of it come down and part of it get converted into inventory.
Sure, that's very helpful. Thanks. That's it from my side.
Thank you, Kunal.
Thank you. The next question is from the line of Vivekanand Subramaniam from Ambit Capital. Please go ahead.
Yeah, hi. A couple of questions on the financial statements. What is the status of repatriation of the 6 billion rupees cash parked in Actinium and Poseidon? Secondly, what is the figure of the cash and treasury investments for the current quarter? And thirdly, with respect to the investment point that you made on inventory, the annual report, in the annual report you had discussed that we are past the peak investment phase. So do you mean the investment phase when seen from the P&L or from the balance sheet? I have a couple of questions on the business also. Maybe after I get the answer, I'll ask.
Yeah, so as I said, the cash and the treasury operation of the company stand at 14.8 billion. For the Actinium Poseidon, we have seen some movement, only minor movement in reduction in the last quarter, and we do expect some reduction to happen this quarter as well, which is Q3. We are working actively with them to redeem it as soon as possible and get it off our books. On the third part, what I meant to say was that whatever investments we were to do have already been done, which is part of inventory as well as advances. Beyond that, we don't expect it to go up further. And hopefully in parallel, once my regional channels launch, I will start passing that also to the P&L. So we are currently looking at it from a balance sheet point of view, and eventually it will all move through the P&L.
Right. And this, Puneet, thanks for the clarification. The cash and treasury investments, this is a gross number, right? You don't have any liabilities against this, right? It's not a net number.
No, that's correct. We don't have any liabilities against it.
Okay. And forgive me for asking this, but because of the deposit that was adjusted, I wanted some color on the 14.8 billion. So if you can clarify where this is parked. Is it all in domestic banks, or can you give some color on that?
Yeah, Rohit.
Yeah. So this is so there is a number of instruments in which this is comprising of. So this includes CDs, fixed deposits, mutual fund investments, and quoted investments and unquoted investments in domestic and outside of India.
Okay. Rohit, can you share some more specific color on this?
Can we take it offline?
Okay. So the one question that I had on the business with respect to ZEE5 was, I was reading Tarun's interview recently where he's highlighted that now the company is planning to focus on kids and also launch into new regional languages. So can you give some more color on the audience profile right now? How much of the DAUs and MAUs that you are currently getting is from India? Can you give some sense of the tier 1, 2 versus tier 3 and 4? Because some of the interviews also talk about you doing very well in tier 3 and 4, 2 and 3 markets.
So the number that I gave of 8.9 million DAUs is predominantly India. It will be 95% plus India. It will be, I don't have the demographics readily, but I can tell you our primary audiences are still female skewed, and they are younger than the television audiences. So if television is generally 35 plus, this will be more in the 18 to 25 or 28 bracket. So I think the split last when I saw was about 57% skewed to females and 43 to males, which is complete opposite of what is on television. So, which is very similar to what is on television.
Okay. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Yogesh Kirve from B&K Securities. Please go ahead.
Hi. So this continuing on the inventory part. So inventory, had increased about 200 crores in FY19 and another 450 crores. So could you give us some breakup of the key components of the inventory increase, and why we are seeing the inventory acquisition of so much only now? Because in the past, most of the television costs get charged off to P&L in that year itself. So why we are seeing so much acquisition over the last year and a half?
Sure. So Yogesh, what happens in there are 2 or 3 buckets, let's treat it like that. So first bucket, which is the largest bucket, is the film library, right? So there is a time when we only acquired rights for television. We did not acquire other rights that we were needing for running the ZEE5 business. We started acquiring that about 3 years ago, or 2.5 years ago, and therefore a large chunk went towards getting the digital rights for that library. Second bucket is our movie production and our music publishing business. As you know, we are now the second largest music publisher in the country, and we acquire close to 60 to 100 movies every year for music publishing. Now, that is not charged the way television content is charged through P&L. It is charged over a 3-year period. Then lastly, we have content that we are making for ZEE5 and for that television network, which is under production or is being sourced from third parties. So that is the third bucket. And once you start putting it on air or on the ZEE5 platform, it sits in inventory, it doesn't pass through the P&L. So these are the three buckets largely you have to look at. So ZEE5 is completely new business. The movies production and music is completely new business. Both these have contributed towards this large chunk of growth in the inventory. And because we find both these assets as a very, very good asset to invest in as a company, we have taken that call and gone ahead and made these investments.
Okay. So is it possible to give an amount related to the amount sitting in the inventory which is not, so the content which is under production or have not been shown on any of the platforms so far?
It will be a very small number. I don't think it will be more than 7-8%. The rest will be all towards the films and the other things. See, we have a policy of films which are amortized over 5 years straight line. So even once the movie airs, doesn't mean it gets written off completely. But there is enough library of my content which is completely written off but still is being aired, or which I'm earning revenue. So it kind of counterbalances, itself. And while this one-off blips of new businesses have added to it, over a period of time this will neutralize and things will go back to normal.
So just a little clarification, you refer to certain 7% of the inventory. So you are referring to 7% of inventory is basically the content under production.
That is correct.
Okay. And so do we see...
7-8%. I don't have the exact number right now.
Sure. So in terms of the charge to the P&L, I mean, considering that the inventory has accumulated over the last two and a half years, so do we see the rate of charging to P&L may increase and the margins may come off in this when the charge-offs really start?
So our non-film content is charged 80% in the first 12 months and 10% over the next 2 years. So that I think is already a very conservative policy that we have. The films on the music side and on the film production side is a 3-year policy. In production we are charging almost 90% plus on theatrical release and the balance over the next 2 years. Music we are charging 3 years straight line. 50% in year 1, 25 year 2, year 3. So if you look at a large part of our content cost runs through P&L every year. It's only the film rights which our minimum purchase rights are for at least 10 years or more. Almost a third of my library I'm sitting on is almost 99 years in rights. So these assets don't just deteriorate in the first year itself. We make money off of these for multiple years even after charging off to the books.
Right. Thanks for this.
I can add, we constantly review our amortization policies internally and with our auditors and with our board, and we'll take prudent calls if necessary.
Right. And so second question I have for Rohit, I mean, in the first half, we see the cash flow from operation is negative. So taking all into consideration regarding the inventory as well as some of the advances, so do we expect definitively that in the second half that the cash flow from operations should be positive by a healthy number?
So, as I said, we are working on liquidation of debtors and we have a definitive plan. This will help us in obviously releasing cash. I do expect that cash flow situation should improve by quarter 4, and by next year we should have positive free cash flow.
Okay, that's all from me. Thanks a lot and all the best.
Thank you, Yogesh.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Yeah, hi, thanks for the opportunity. I have a few questions. The first one, your domestic subscription revenue growth is about 36% in first half, and you guided of 25% that number for the full year. So is there any change in guidance? What should we expect for the full year?
No change in guidance yet.
Okay, so growth in second half will be much lower. What...
On subscription, Jay, because you compare it to our last mechanism, which is a very different mechanism, a lumpy mechanism of collections and billing, that is all changed. So it's not really apples to apples from that perspective.
Understood. Now, your related parties receivables was about 500 crores as at March end. What would be that number, or what would be it as a percentage of total receivables of 2,400 crores? How much would be related party?
So, the overdue amount would be in the range of about 250 to 300 crores.
Understood. And what is the usual amount? If you could give me the entire number, it will be helpful.
So the entire number of receivables would be in the range of about 700 crores.
Understood. Then, last, as at March end, you had given interest-free deposits of 6.9 billion and advances for 2.45 billion. I understand you mentioned that some of that inventory content you've procured. So what is that aggregate number, which was 9.35 billion as at March end? What is it now as of date?
So both the deposits and the advances that we have given, so there is movement in that. In the advances that we had given, I think roughly around 75 crores has already moved. And in the deposits also there is movement, which is there.
What would be that aggregate number as at September end? If you can give me, is it possible, or should I?
Yeah, we don't have the exact number right now. Can you take it offline?
Sure, I'll take it offline. And finally, Puneet, thanks for explaining us the amortization, overall sort of inventory amortization policy across different segments. Now, if I broadly look at the inventory increase, it's about 1,600 crores on a YOY basis. And if I look at your base quarter programming cost and current quarter programming cost, the increase is 160 crore. So the 1,600 crore net inventory increase, my sense is that ballpark minimum there should be a 300 crore increase in the amortization expense or programming costs. So is there any change in the inventory amortization policy between the base quarter and the current quarter?
No, Jay, you're not factoring in the fact the inventory that has been accumulated, but we have not launched the channels yet. And therefore, it's not passing through the P&L, it's just sitting in the inventory. So, I had a plan to launch a Kannada movie channel, a Tamil movie channel, a Bhojpuri movie channel, and a Punjabi channel. 4 channels are still not launched, for which I have accumulated a lot of library.
Understood. But for movie amortization, 5-year policy still is unchanged. Is that right?
That is correct.
Satellite rights, 5 years, right?
Yeah. Vijay, your decision.
Yeah, so one thing which you are missing there, you are looking at base quarter and this quarter, but base quarter had a movie, a big movie also which was there, and that had inflated, that led to higher costs. This quarter we did not have any movie, so the comparison might not be as easy as just looking at base quarter and this quarter number. On top of that, there is lot of difference in which, the programming bouquet itself might be different. So we might be doing awards, we might be doing events. Now it depends upon where the festivities are, which quarter we want to do. So just a simple comparison will not give you a full picture.
Understood, Vijay. In fact, I was, I believe the increase is lower than what it should be given the increase in, inventory. But Puneet, I think, did explain that a lot of inventory sitting on balance sheet is yet, the channels are not launched, so you're not charging it to P&L as yet.
And also there are future rights. So in my inventory, let's say, if you look at FY19 balance sheet, almost 4 billion rupees of future rights are there, 4.75 billion rupees. Now these rights have not even started. So there is no amortization with respect to that.
Right. And just a request, if it is possible, maybe, in the future quarters or maybe next year, given that, inventory and there will be questions around amortization of inventory, would it be possible to give a breakup of programming cost and movie amortization expense going forward at a later date? Just a suggestion. If it,
we'll consider it.
Thank you.
Thank you.
Thank you. The next question is from the line of Arun Kumar from High Yield Fund. Please go ahead.
Yeah, thanks for taking the question. You had mentioned 700 crores is pertaining to related party out of the total receivables of 2,500 crores. And also you had given an overdue amount of 250 crores relating to related party. Similarly, can you give me the related party breakup in the other financial assets, 1,376 crores?
Yeah, just 1 second. Yeah, just let me just say. So, roughly around 200 crores out of the 1,300 crores is relating to related parties.
Are there any related party transactions in the other current assets also, which is about 1,465 crores?
No, other current assets only.
Yeah, I don't think there is any amount in the other current assets.
There are no other related party assets in the current liabilities.
Okay. And in cash and treasury investments, were you able to, the previous participant had asked for the breakup. Were you able to get that breakup?
No, like I said, we'll give you the breakup offline. The cash and treasury, see, this is all in fixed deposits, certificate of deposits, mutual funds, NCDs and bank balances. And the exact cash is not available with me right now, but we'll give it to you offline.
Predominantly is in Indian investments, right?
Yes, it is in Indian investments, and we do have overseas investments as well. Yeah.
And in the P&L, what is causing the fluctuation in that fair value? Because it's moved from, on a Q-on-Q basis, it's moved from 68 crores gain to now 8.75 crores loss in the Concall P&L.
So this fair value adjustment relates to redeemable preference share which we had issued as bonus to our equity shareholders. As per accounting standard, fair value accounting standard, the value at which this instrument need to be recorded should be the market value because this preference shares are listed. So whatever is the fluctuation in the market value of this share is passing through the P&L as fair value every quarter. So it has got nothing. It has no cash implication. It is just a notional, sometime notional gain or sometime notional loss, depending upon how the price of this instrument traded, changed over the quarter on BSE and NSE. So it can be positive, it can be negative. There cannot be any trend on that because the price, it's like stock market prices can go up and go down, and that will be reflected as loss or profit.
So this is only on account of preferences, no other instrument?
Overwhelmingly, there might be some more, but more than 95-99% it is that.
Okay. Thank you. We will take that cash breakup offline. Thank you.
Thank you.
Thank you. The next question is from the line of Vivekanand Subramaniam from Ambit Capital. Please go ahead.
Hi, Puneet. Can you please give some more color on the advertising environment, the revenue decline for the industry? You have mentioned in the quarterly note that it is looking up now. What is your expectation of industry ad growth for fiscal 20? And what do you think drives the growth optimism that you have outlined in the quarterly note?
So I think firstly the festive season itself will drive some amount of advertising growth for the industry and therefore for us as well. We are seeing, and I don't mean so much more for the industry than for us, because given our network share and given our consolidated market positioning gives us a far better leverage to negotiate with the advertisers. That's where I said when the industry has seen a degrowth of 4%, we have still managed to deliver a 2% positive, despite the 4% degrowth, despite the shutting off of two very profitable FTA channels that we had switched off. So from that perspective, the industry may get to maybe a flat kind of situation for the rest of the half, but we'll definitely beat the market.
Okay, and as regards to the network share numbers that we see, 18.5% now, and around 18.7 in 1Q. This is slightly lower than the 19.5 odd number that we saw in 1H FY19. Is that only because of the shutdown of the free-to-air channels? Can you give any more color on that?
Yeah, it's largely on account of that. There may be some movement in the existing portfolio, but that will be minuscule. In fact, the FTA channel contributed for more than 2% of viewership share for the network. So it was actually prior to that even at 20% plus, which is now at 18.5.
All right. Thank you. All the best.
Thank you, Ray.
Thank you. The next question is from the line of Sanjay Chawla from JM Financial. Please go ahead.
Hi, thank you for the opportunity. My first question is on this overdue amount you indicated from related party, 250 to 300 crores now. So what is the provisioning policy with respect to this, and should one expect some more exceptional costs to be booked in the coming 1 or 2 quarters on account of this?
So as a policy for related parties, we don't provide for but we have received a definitive plan and a binding plan from them for making these payments over the next 2 quarters, and we are quite confident that they will stick to their commitment, and therefore you'll see a significant reduction happening by quarter 4. So yes, there should not be any impairment on account of this.
Okay, and second question is on Z5. Have you not disclosed MAUs? Maybe I have not noticed it yet. For Z5, the last month of the quarter.
No, we have now decided to disclose daily active users because that's a more metric that we use for trading.
Mm-hmm. Okay, so how do you feel about this? Daily DAU to MAU ratio. It still seems to be low, assuming your MAUs have grown from last quarter's level. And this is despite release of a lot of the original shows. So I'm just trying to understand what could be the factor here. Some of your other rivals like Voot and Hotstar, they have much better percentage of DAU versus MAU. So what could be behind this, and second related question is, how do you feel about the pricing? I believe some of the discounts are no longer there on the annual subscription of Z5, for the entire content. So,
You are right that the MAU to DAU conversion is still lower than the industry, but keep in mind that we are just about a year and a half old, and our original content started only about a year ago, not even a year and a half ago. So we are quite confident that we'll continue to grow from here, leaps and bounds going forward. From the last quarter, the percentage of conversion from MAU to DAU is significantly gone up. I think it's about 60-70% growth. And we are pretty confident that the numbers will keep tracking. On the subscription side, I am very confident that the numbers that we are delivering on the subscribers that we have captured so far is in line with the industry, in fact, beating most of the players in the industry. We've taken the discounts away. And you're right, we've taken the discounts away.
Yeah, so my question is basically more on broader perspective on pricing, whether 499 is really the price point at which one unleashes a lot of demand, or because there's a lot of competition obviously out there for this paid for SVOD also. So is there really pricing power out there which helps you or would help you command a 999 and maybe further increase in the future on an annual basis?
No, I'm pretty confident that if we continue to produce good quality content, people will pay for it. And that's testimony to the growth that we have seen, not just in Z5, but even in the broadcasting business. I mean, if you look at the kind of pricing growth we have seen in the broadcast business also is because our content has a pull towards it, and therefore we manage to command these high prices. As long as Tarun and his team continue to build on content which the consumer wants, they will pay for it.
So we haven't seen any significant pickup in the churn once the pricing got reset to a higher level after first year?
None whatsoever. We've only seen growth.
Okay. All right. Thank you very much and all the best. Yeah.
New thing that is being allowed with auto renewals, etc., the numbers will only track higher.
Right. Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi Puneet. So just a couple of clarification. One, on the a la carte pricing, which you mentioned, and I appreciate this is more to increase the penetration. Now, if I go back to our discussion, in South India, we were pretty much there in terms of presence across the base packs. While in HSM, there were certain issues with select players here and there. Has that situation improved, or is this pricing strategy largely addressing that part itself?
No, this pricing strategy doesn't really impact the regional markets in a big way, because as I said in my opening statement, that most of the reach impact that we had seen during the implementation of NTO has come back, and people will continue to buy bouquets in this country. I am very clear on that. A la carte will be a very small segment of the audience base that is subscribed to. So I don't see much impact happening. I see more impact possibly in the Hindi-speaking markets, where the penetration of our pay channels in the rural markets can increase much better through the a la carte pricing strategy.
Okay. And any percentage you can share in terms of our reach in the HSM market overall, or maybe rural versus urban?
So I don't have the number right now, but I can tell you we are about 90% of pre-NTO in most of our markets.
Okay. Fair enough. That's encouraging. Secondly, on Z5, while we have sort of taken away all the longer gestation sort of discounts, the long-term pack discounts on Z5, we did have earlier mentioned of launching sachet-based pricing. So that, what's our thoughts over there, which can probably increase the penetration of Z5 as well in the respective regional markets?
So we already have the regional pricing different than the all-you-can-eat a la carte. And we are working on lighter packs as we speak, which will be rolled out in the next couple of quarters.
Sure. And on the international distribution, any updates there?
International distribution, not much to update. We are focusing on Z5 rollout. We are very aggressively rolling out in the APAC and the MENA region, and following which we will go to the UK and the Europe, and then finally US at the end.
Okay, fair enough. A couple of bookkeeping. Now, the tax rate in this quarter is only 15%. So, any specific reasons there, and what should be the number one should take away?
Yeah. So, you are probably aware. So, the finance minister had announced reduction in the corporate tax rate. We have therefore, computed the estimated tax based on that, and we see the adjustment in this quarter. So, yes, the tax rate has come down from the overall 33-34% to about 24-25% now. We will see the benefit in cash flow as well in the next 2 quarters. So, hopefully, in the next 2 quarters, our cash tax outgo should improve by about anything between 250 to 300 crores.
So, just to be specific to your question, because we had provided for higher tax in Q1, that has been written back.
Now, a related question to that, and if I got it right, we did mention because of, our higher investment in content, the OCF in the first half obviously is negative, and maybe by end of year things will improve. So for the full year, are we expecting OCF to be positive? Because if I got it right earlier, we said FY21 we'll see OCF positive.
Yeah, so next year we expect the free cash flow to be positive.
So OCF will be negative despite, lower tax outgo in the second half there. So.
Yeah, I mean, we are working on improving our, liquidating our debtors and, releasing cash wherever possible. So our endeavor is to, have a positive FCF this year itself, but, definitely next year we'll have a positive FCF.
So we are not saying that we will be negative. We are working towards ensuring that it's a positive FCF, but next year for certain will be positive.
Sure. That's helpful, Puneet. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Dinesh Kulkarni from Mission Holdings. Please go ahead.
Hello. My question to you is the operational cost on standalone basis has gone up by 50%. Can you please explain on that?
Sorry, operation cost?
Yeah, cost. Yeah. On the standalone financial statements, P&L.
1 second.
It's increased from 540 crores to almost 800 crores.
Yeah, see, this is primarily on account of investments that we have been making in our ZEE5 in the digital platform. So if standalone includes digital platform, and it is on account of that, both in terms of programming, transmission and personnel.
Okay, fair enough. Thank you. Can you just provide some light on color on ZEE5 content investments? Like how would we see the difference in technology and content investments to go through the next 2-3 years? Do we expect technology investments to come down and will be more focused on content? Can you just provide some bifurcation there?
See, there are two parts of technology. First, one is capex, the other is opex. So the capex is not very high in this business. Most of the investments have already been done. There are marginal investments we are making to improve the tech platform, etc., especially on whether the ad tech suite is concerned, whether it is the user interface of the app, etc. So that will not see much investment going forward. It will be incremental. But operating technical costs will continue and only increase because as the consumption increases, you pay for more consumption. So the transmission cost here is nothing but the content delivery network charges that we pay to people who carry our content and deliver it to the consumer. So that, as consumption increases, that will continue to keep going.
Okay, fair enough. Thank you. Thanks for that.
Thank you. The next question is from the line of Anshu Govind from Origin Capital. Please go ahead.
Hi, good evening. My question is regarding the 500 crore odd you need to pay to the preference shareholders in March. So is that possible without taking any additional bank debt? And do you have enough free cash, unencumbered cash onshore in India to make the payment?
It will be paid from our treasury operations or internal accruals. We will not be taking additional funding from anywhere.
Yeah, and that is already factored in, when we talk about our cash flow, it's already factored in.
Okay, thank you.
Thank you. The next question is from the line of Sudhir from A Square Capital. Please go ahead.
Yeah, hello. I have a question with respect to this 200 crore FD which has been broken. Was there any charge created by the company or any of the group entities which bank had then taken into consideration while breaking the FD?
No, as I said in my opening remarks itself, it is a wrongful encashment and a completely unilateral decision they have taken. We have never encumbered any of either these assets or any of the group's assets against these assets.
But was there any document or impression given to the bank that these are charges created?
Not by the company, so I can't claim that something was given.
Okay, thanks.
Thank you. The next question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Hi, thanks again. A quick bookkeeping question. So, peak DAU base of 8.9 million in September, is this like the peak DAU achieved on any single day, or is it average for the month of September?
It's not one single day, Jay. It will be it may not be for one day, but it's also not 30 days. It will be a significant period during the month.
Okay.
Just to give you some color, our consumption actually is high on weekdays for our soaps, etc. For our original content, consumption is high on weekends. So it kind of plays off from that perspective. So based on when we upload content, etc.
So how do you compute it?
So if you look at our soaps, which is our regular television content, that is uploaded immediately after telecast of the television show.
Right.
Therefore, the consumption happens on weekdays. All of our original content is generally launched on a Friday, and therefore consumption happens on the weekend.
Right, but the 8.9 million number is is that on a particular day, or is it average of a few days?
It will be for significant part of the month average.
Okay. Understood. Second is, your as per the annual report, corporate guarantees of about 900 plus crores were against, for some loans of city cable networks. Is there any change there, or is there any other change in corporate guarantees per se?
It is, as per my recollection, it is down below 300 crores now.
Corporate guarantee number, overall number is down to 300 crores.
Yeah, it is overall is less than 300 crores.
Okay, that's it.
It's not even 300, Jay, because these guarantees are in form of DSRA guarantees and not, full loan guarantee. Therefore, our exposure is limited to just a quarter. Therefore, but if you want to take the whole loan, it is less than 300 crores.
Understood. That's helpful. And just a final question: any incremental update you would want to give on, the debt resolution plan, or any progress on infra assets, or any updates you may want?
I was wondering there that nobody's asked me this question, and we are almost at the end of the call. Thank you for asking this. So, apart from my call that I did last Saturday, as I stated, we are working on solutions that we are currently evaluating are aimed at removing the so-called overhang on the Zee stock in a holistic and timely manner. We are working with several parties on the Zee stock deal. There was a certain disclosure that happened after that from BTV. We are in constant dialogue with BTV. We believe they are a responsible institution and they will not take any action in a manner that will hurt their interest, our interest, or other shareholders' interest. And apart from that, the latest development has also been that for our education vertical, Zee Learn, which is the largest education company in India, we have received inward interest from strategic and financial investors, which we are evaluating actively.
That is helpful. Thank you so much and good luck.
Thank you, Jay.
Thank you. The next question is from the line of June Leong from New Silk Road. Please go ahead.
Hi. Thanks for the opportunity. I just have three very quick questions. One is there any plans on sort of the reinvestment of the tax savings from the corporate tax cut? If you could give some color on that, that would be great. Second is on the on the domestic ad revenue. Are you seeing anything in the rate cut? So any sort of pricing pressure or anything on that? And lastly is the time spent per day on Z5. In the release, you put 120 minutes. Is that comparable to the 33 minutes that you last reported? Thank you.
Vijay, you want to take the first one?
Yeah. So as far as corporate tax rate cut is concerned, we have been investing what was needed in both the business, broadcast and digital. So immediately there are no plans, and we continue to maintain EBITDA margin guidance also. The most of the tax cut will probably accrue in profit line, and it will add to our EPS for the year.
Coming to the advertising part, while the industry situation is still not as healthy as one would expect, but I am hopeful with the festive season around the corner, things should be better than the first half. Only time will tell, but it should improve over the first half at least. That's what my understanding. And irrespective of whatever happens to the industry, we will always endeavor to beat the industry number to the positive side. What was the third question?
Can you please repeat third question?
It's on the time spent per day disclosure, 120 minutes. Is that the same as last quarter's 33 minutes?
So the 33 minutes number was computed when we used to give you the monthly active users. So that number is no longer relevant for us to track. The 120 minutes consumption is based on 8.9 million daily active users and what their consumption is. So this is a real relevant part of our business that we are focusing on, and we'll continue to drive that. This is what drives our advertising as well as the subscription revenue in this business.
Okay, sure. Sorry, just one quick follow-up on the tax reinvestment. So you mentioned immediately, no immediate plan. Should we take it that the cash will just sort of build up on the balance sheet?
Yes.
Yeah.
Okay. Yeah, okay. Thank you so much.
Thank you.